September PPI, and there's some surprises here. Headline number coming in better than expected. Unchanged, but we have been there before. It was unchanged in July. To find a lower reading, you'd have to go to decent at the end of last year when it was minus 1/10. If we look at ex-food and energy, it's as expected up 0.2%, and it's 1/10 cooler than the rear-view mirror. Up 0.2. Well, up 0.2 is still a little warm considering we were down 0.2 in July. If you look at ex-food, energy, and trade on a month-over-month basis, coming in a tenth light, up 0.1%. Last month, downgraded from up 0.3 to up 0.2. Up 0.1. Well, once again, if you look at where we were in June, it was only up 0.1. To find a lower number, though, you have to go way back. The last time we had any negative number here or a zero, boy, I have to go back a long ways. You were going back to mid-2020. Now, the year-over-year numbers. 1.8 year-over-year headline, or final demand as we call it. That's definitely warmer than we were anticipating, and it's 1/10 hotter than our last look. It comps to 2.1 when we were in July. Ex-food and energy up 2.8. Definitely warmer than expected by 0.2 versus expectations. 0.4 higher than our last look, which was just revised from 2.4 to 2.6, which now makes it only 0.2 higher. 2.8, well, we're at 3% in June. 3% in June, that's where it comps. And finally, year-over-year ex-food, energy, and trade, 3.2. That is 1/10 cooler than the rear-view mirror. It equals where we were in July. But boy, if you look at January, February, March, all three of those were under 3%. So how do you want to slice and dice this? Are we making progress? In certain areas. I'm sure some of the newspapers, just like CPI yesterday, will say, inflation's coming in lighter. They cherry pick which one. And I don't know. When I look at CPI yesterday or PPI today, it looks like we're stalled in the sand in some of them. We're making slight progress in others, but it definitely still doesn't look like a 2% Fed target. So it all depends. How's the market? Quite undecided about it, I guess. We're a basis point lower in twos. We're right around the same area in tens. And consider that at 408 in tens, we're up 2 on the day. We're up 11 on the week. And if we get above these levels, and it's getting very close, we'll have 8 consecutive sessions, both in 10s and 30s, where it's traded above previous days' high yields. This is something that doesn't happen very often, and it really goes to the whole point of how interest rates have definitely gotten a life of their own, and they do underscore that one dynamic. The Fed does control certain aspects of rates on the short end, and they have quantitative easing to try to manipulate rates beyond that. But the market has a voice, and that voice has gotten a whole lot louder as of late. Joe, back to you.